All right, could we have wished for a greener performance on the NGX? Yes, we could have, but we made 19 basis point gains today, so we're going to have to make do with that. Coming to the performance of the NGX, we can see the all-share index is up 19 basis points, 97,706.7. We're also seeing the market cap at 56.15 trillion naira, so it's some gain. At least perhaps we'll recover from last week. We only had one day in the green. Market altogether was in the red. So let's see what this full week in October turns out to be like. Let's come to the top gainers for today. If we can have that up. We have Fidelity Bank making a rebound. We know last week it was one of the top three decliners for the week, but they're making a rebound. Of course, there's the announcement of their dividend payment, about 80 kobo per share, and they also had their earning results come out. So yes, they're up 10% today. ABC Transport up 9.76%. Livestock Feed as well, 9.76%. So they're both in together. Second place, Redstar Express is also up about 7%. Ella Lakes as well, up 8.44%. When it comes to top losers, top decliners, we have SCOA, I believe, topping the top decliners list today, losing a whopping 10%. Beggar Paints as well, down 9.95%. Triple G, investors taking profit because we know it has been in the green for a bit lately. It's down today, 9.64%. Guinea Insurance as well, down. Thomas Sway, also down 7.58% today. Top traded stocks, we're seeing trade volume strengthen to 1.31 billion altogether. And of course, Tantalizers leading when it comes to volume. UBA when it comes to value, leading when it comes to top traders. Access also up there as a top trader. Capitan was in the red today. I believe they had their earning results also out. I don't think it was so pretty. They did decline today. They're in the red today, but a top traded stock, GTCO as well. So three banking stocks, top traded. Banks are probably the most liquid stocks on the NGX, so no surprises there. When it comes to the currency market, we're seeing the naira strengthen further closer to the 1/6 floor at 1,625 naira, 6 kobo, and of course other currencies as well strengthening. Stable, either stable or strengthening. That's how it's going today on the currency market. Up next, we'll be picking up the pulse of the day with senior analyst with Cardinal Stone Securities Adebayo Adebanjo. So stay with us for that. Frank will also be joining me for that conversation. So stay tuned. All right, we have the analysis, now a breakdown from senior research analyst at Cardinal Stone Securities, Adebayo Adebanjo. It's a pleasure to have you in.
Thank you for having me.
Always a pleasure. Right, let's begin. Earning results expected to boost capital markets in the final quarter. But I mean, considering all the macroeconomic developments, both locally, globally, there's so much happening. Do you see the results emerging as strong as it did in previous quarters? Will the banks do as well? And what are the pointers to all this?
Okay, yes. So I think that, to an extent, we should see stronger Q3 numbers. Already away from banks, if you look at, other sectors, we've seen that other sectors have been, driven largely by higher prices across products. So on a revenue standpoint, we think that revenues will continue to remain strong. Although we're a bit worried about cost pressures, as you know, in the quarter, that's when we saw the jump in PMS prices. So we think that this might still, add to the already existing cost pressures and might pressure margins significantly. On the FX front, and I'll get to banks in the GIF, we think that the slower decline in quarter-on-quarter currency at the NAFEM window should kind of forestall weaker FX losses for the quarter. We should see smaller FX losses for companies like consumer goods, cement producers who have been hitting hard by these FX losses for the most part. So we think that just because the currency stabilized in the quarter, we might see lower FX gains on that front. And then for the banks, we think that most of the FX gains that have been reported already for the year is probably what we would see, in their earnings for Q3. We do not see, any other significant jumps as far as FX gains, for banks would be. I think the most of FX gain that we'll probably see will not largely be a currency thing will probably be movements in the equity investments that some of these banks already hold. So of course, if some banks have financial assets like the likes of an Nvidia, right, or a Tesla, or that has been doing very well over the course of the quarter because of their own earnings releases, when they revalue some of these assets, we might see that contribute to their earnings. But on a pure currency leg, we think that the stability in the currency in that quarter should kind of stabilize gains from that front.
Okay, so you're anticipating stability in the FX market? Is that what you're saying? I mean,
for the quarter. I'm speaking for the quarter because the quarter ends in September, and when you look at the NAFEM window between the end of June and the end of September this year, you see that the jump in the currency. I mean, the weakness was about 2.6% thereabouts. So the weakness in the currency was not very pronounced in the quarter, and this is largely driven by the CBN's efforts to stabilize the currency through multiple interventions in the market. So I think that has borne some fruits for the market, and that's why we do not think that either on the loss or the gain fronts, we think that it should be minimal in the quarter.
I mean, that would be
that should drive positive sentiments, to some extent.
Okay, I mean, it'd be interesting to see that play out. But sticking with currencies, there's a lot of talk about the naira right now and seeming volatility on some level. How do you think that will also influence investor sentiment around certain stock and their investments altogether?
Right. So, like I already said, given the relative stability that we have seen in the currency because of how the CBN has been intervening in that market, we think that this would improve carry trade, especially from the foreign investor point of view. Of course, as you know, the carry trade looks at currency stability and, of course, interest rates. And as you know, when you look at the past OMO auctions that we've seen in the past couple of weeks, the CBN is very, very excited to give foreign investors very high juicy rates. And then when you compare this with how naira has been stable over the past couple of weeks, it just gives you the sense that we might see increased foreign investor participation in our markets. In fact, when you look at FPI participation data for the NGX, we've seen an increase in the month of August. September data is not out yet, but as of August, we've seen an increase in foreign investor participation on the NGX, even though this has largely been dominated by domestic players. So this just gives you a sense that investors are monitoring the stability in our currency. And of course, coupled with the high rates, like I already mentioned, it allows for very improved carry trade performance.
I mean, interesting. I mean, we hope to see how that plays out ahead in the quarter. Let's come back to banking stocks and their perceived or projected performance for the final quarter. And even right now, we have Fidelity Bank. They came out with their results, I believe on Friday. But in a build up to that, unlike the trend typically is, we saw them trend downwards, right? And today obviously they're making a rebound. What are your thoughts about their results and what we witnessed with first of all, a strong rally initially, right, considering after, confidence around successful completion of their capital raising exercise. And then last week in a build up to their results, we saw the decline and now a rebound. What would you say are investor sentiments around that stock right now and their results?
Okay, so I think that the sentiment largely is because we've seen a lot of shakeups in tier 2 banks. There's been market hearsay of significant activity across tier 2 banks, largely the likes of Sterling as well, and I think that is what is feeding into Fidelity, right? As far as Fidelity's capital raise is concerned, we don't exactly have direct figures as to how much was raised. I mean, we do know that the company said it was oversubscribed, but we don't know by how much or how much they have raised. And when you look at the rally that has occurred, this happened a couple of weeks after the capital raise announcement. So to be fair, it's kind of difficult to tie the rally in the stock directly to the successful capital raise. I mean, of course, when you also consider the fact that these shares have not been allotted yet to shareholders, right? So I mean, I would say that it's largely around the sentiment around strong earnings that we've seen from other tier 1 players feeding into tier 2 players, and also some probably strong investor activity, probably buying up majority stake in some tier 2 banks, and that's also feeding into the likes of Fidelity. But of course, Fidelity has also published very strong numbers, and of course, the dividend is pretty decent. And I think that's what has driven that rally. So of course, as you know, banks are profit taking is always very close to the rallies. It doesn't rally for too long before investors take their profit, and so that's what we saw in that decline last week. But of course, again this week, investors are picking up those declines and they're looking at these attractive entry points again to take position. And so that's why we saw the stock rally again today by 10%. So if you would ask me if it's going to stay 10% again tomorrow, that would be a very difficult question to answer. In fact, if I knew the answer to that, I would not be doing this job. But, banks typically have shown that, rallies do not exactly go for too long because, as you said, they are probably some of the most liquid stocks on the index. So the volatility is, very abound.
I mean, we'll be monitoring, of course, the rally, whether or not it continues again tomorrow right here on the show. But it has been a pleasure having you in on the show, Senior Research Analyst with Cardinal Securities, Adebayo Adebanjo. Thank you.
Thank you.
All right, that's on Pulse of the Day. But of course, Frank Fagbo will be up next with key metrics, an interesting part of the show. And of course, we'll also get some insight into what's happening on the African market. So stay tuned. All right, we're here now for key metrics. Handing over to Frank Fagbo to take it away.
All right, this is key metrics. And if you look at what is happening in the financial sector, you see that some of the David, many of them, the underdogs are beginning to roll with the big boys. That's what you are seeing based on this particular report. You're seeing that PalmPay, OPay, and other mobile money operators processed not less than 41.5 trillion naira in transaction. And all of this happened in just 7 months. Now imagine in Nigeria where cash is no longer king. Mobile money transactions are revolutionizing the way we pay. Latest data from NIBS reveals that the mobile money operators like PalmPay and OPay processed a whopping 41.5 trillion naira. And all of this just happened in 7 months. That is 74% jump from last year, 23.9 trillion naira. At this rate, they're most likely going to surpass the 2023 record, which is 46.6 trillion naira. Now, just get your eyes glued to the numbers so you understand what we're talking about. Nigeria's shift to a cashless policy is one of the driving growth. It's one of the reasons why we're seeing exponential growth as regards some of these fintech companies. The central bank's cashless policy is also one of those, limiting daily withdrawal to 500,000 naira for individuals and 5 million naira for corporates. All of this is literally paying off. With 17 licensed mobile money operators and over 200 fintechs, Nigeria is literally embracing digital payment. Despite a brief regulatory setback, sometime last quarter, we saw the setback that CBN brought about as regards so many of these fintech companies, telling them to just put a pause to onboarding new customers. All those policies literally did not it made them really stronger, and you're seeing them literally overcoming and conquering more market, taking over much more territories. 41.5 trillion naira is no joke in any economy, and despite the brief regulatory setback, mobile money transactions are thriving. The total e-payment across all channels hits 566.3 trillion naira from January down to July. Let's take a look at a few of their numbers. Let's crunch a few numbers. The key data points to note: 41.5 trillion naira mobile money transactions from January to July, and this is 74% growth compared to what we had last year. It's an increase from last year. Last year was 46.6 trillion naira, and we're at the start of the final quarter of this year, and we're closing in on that. Current data is 41.5 trillion naira, and the entire 2023 was 46.6 trillion naira. So obviously, we're literally going to beat the record. 2023 mobile money transaction clocked all channels 566.3 trillion naira. The total e-payment also was saying that the 17 licensed mobile money operators, 200 plus fintechs in Nigeria, and all of these guys are literally contributing to the 41.5 trillion naira in total. That's some massive revenue, if you ask me, and it looks like the underdogs are beginning to roll with the big boys.
So you really think that they are on some level a threat to the legacy banks?
It is, and I think that one of the major reasons why we're seeing all of this is the proliferation of POS machines. You're seeing a lot of Nigerians are no longer making use of the ATM.
And of course, that was buoyed by the naira redesign. Remember that, since everyone has a POS for payments, even at some point, Malam had a POS for payment. Every supermarket has, and it's mostly the fintechs that are leading those POS payments.
It was more or less like a blessing in disguise.
It was, and I believe that perhaps was a huge catalyst, for some of these fintechs. But again, CBN has clamped down on them, and some will say for good reason, right? Security of transfers. They're those, I mean, when it comes to some of the largest transactions, I'm sure people would rather go to the legacy banks than the fintechs when it comes to security and all those things. So they definitely still have some way to go with gaining trust, right? Especially when it comes to larger transactions.
I think for now, you're seeing that Nigerians are no longer, that trust gap has literally been closed, because a lot of Nigerians are patronizing some of these fintechs because you get your alert instantly, and that's one of the major reasons.
Transactions,
for minor
typically,
transactions.
you wouldn't put your life savings.
The minor transactions
I'm not sure people at that point
are the backbone of the Nigerian economy, the informal sector, the 1,000, the 500, the 200.
But do you think they'll ever get to that point of, bridging that trust gap when it comes to handling those larger transactions as the legacy banks
Numbers don't lie. 41.5 trillion naira. you can have that value without trust in any market. You can't have that value without trust in any market. That's where we're seeing this huge sum. These guys are taking over. And if you look at what is happening, commercial banks are even having offset of fintech companies.
I mean, we'll definitely be tracking the numbers, right? That's what we do, hand you the data. But I wouldn't put my money on that. But thank you so much, Frank, for handing us the key metrics, especially when it comes to the fintechs. We'll continue to monitor all that and more. Let's get a quick glimpse at the African markets. Green, pretty much, across all the exchanges that we cover here. Johannesburg, Morocco, Egypt, Nairobi and Ghana, all in the green. Let's see if we can keep up this momentum. The bulls can take over the week. We'll continue to track that right here on the show. It's Market Pulse on News Central in partnership with Nairametrics. Catch us every weekday, 4 p.m. West African time on this station.